What's going on, friends? Hope you're doing amazing. It's your captain of the candlestick, Mr. Jeremy Alexander Newsome. That is me, speaking in third person, which is really dumb to do. Hope you're enjoying your Friday. In this video, we're simply discussing and looking back at a previous trade that a trader did and talk about it, learn from it, talk about the good, the bad, the ugly, the pros, and the cons. Take that information and apply it for future trades. Let's dive in together. You rock.
Traders from around the world, what's going on? It's Jeremy Alexander Newsome with reallifetrading.com. Hope you are doing both spectacular, phenomenal, tremendous, and serendipitously, wonderfully incredible. We got ourselves the stock review, trade review on Friday. Today was a very interesting day out there in the markets, and nothing too crazy, honestly. Just looking at everything, just a little bit of pullbacks, a little bit of dip buying opportunities for the most part. But since it's Friday, I do have a trade review coming your way, and this one is from my really just love this guy, Jason Jackson in Lexington, Kentucky. He was at the meetup in Frankfort, Kentucky just a few weeks ago, and he was working on some option trades. So what we're doing is we're going to kind of discuss a little bit just this particular trade. So first and foremost, he's learning about options, so he's pretty familiar with stock. He's got that part down. So now he's working on learning options. This is Morgan Stanley, and what I'm going to do is just look at the daily chart. And so on the daily chart, what you'll notice is Morgan Stanley has traded down to this price point before back in mid-August, and now we trade back down to it again, and we started bouncing. Here's your bounce candle / warning signal / heads up / hey bro, we might be going long. Your one white soldier candle, new white soldier candle on October 9th. So it's beautiful. And again, shout out to Jason. He said he got in to the call option on the 10th. And getting in on the 10th makes a lot of sense. That's the day that the stock went higher than the one white soldier candle. He bought the $40 call option expiring November 15th. And that's how he played it. So he bought into the call. He did hold over earnings, and there's two things in this particular trade. Number one, holding into earnings or holding over earnings. Obviously, if you're trading options, the risk, really the risk in anything is the stock gaps against you, and you can lose a lot of money. One of the things about options is there's something called implied volatility, and pretty much what that does is it causes the stock. I did not spell any of those correct. But it causes the option price to be a lot higher than what it normally is. So holding it over earnings, you're going to lose a little bit of value from the implied volatility. But obviously, if the stock gaps in the direction you want it to, then it should be good. In this particular situation, there's another thing that you can do called absolute zero. And that's kind of the route that Jason took. So absolute zero is you buy an option, and whatever the option costs you, if the option costs you that amount of money, that is specifically how much you're going to risk, and that's your worst case scenario. So in the situation of Morgan Stanley, buying an option, let's say that option costs $100. If your risk is $100, worst case, the option goes to zero and you lose your risk unit. But if the option goes in your favor or goes semi in your direction, then you can make really good returns. So Jason right now is up nicely on that option, over 100%. Return on his investment. So from now, we have to figure out what's going to happen. The interesting thing is dividends are around the corner on Morgan Stanley, but what's noted is you do not receive the dividends for being in an option contract. So that is one thing to consider. However, if Jason wanted some shares of Morgan Stanley, he has a $40 strike. So since he has a $40 strike, he could just simply call his broker and say, hey, I want to exercise my right to buy the shares, and he would truly get some share ownership of Morgan Stanley at $40 per share. So that's his option. You still have that right. You still have that choice if you want to do that, and you could buy the shares. So if you bought one contract, per every contract you buy would be 100 shares of Morgan Stanley, and you could get the dividends that are upcoming. Other than that, looking at the actual chart itself, between now and November 15th, that's his expiration, Jason has the opportunity, ability, and the right to sell that option whenever he wants. So a big takeaway from the call option, ladies and gentlemen, is you can easily get out of a call or put at any time. So if you buy an option, you can get out of that option whenever you want. Totally your call. So he's able to sell this call anytime he wants between now and November 15th. So at this particular moment, I think you're going to want to hold it, man. The trend looks good. Moving averages have gone down. You're probably going to get a little bit of a flag pattern, but you had a nice little double bottom, and kind of very similar to here or here. We kind of gapped up, paused a little bit, and then broke higher and trade up to resistance. So this particular point, my friend, it looks like this is one that you're going to want to hold for a little bit longer. So congratulations. Another thing that you can do, which is a little bit more advanced, but since you own a $40 call, you could sell a $46 call on Morgan Stanley, and that would actually bring money in. This particular trade's an advanced trade, and that's called a bull call spread. So I don't know why I can't type recently. It's been really bugging me. Bull call spread. So that's a debit spread, and this particular debit spread would bring in, so if he sold the November 46, that would bring in 22 cents for the 46 call. So what that means is that's an additional 22 bucks pretty much on the actual trade itself. And what that does is it pays you realistically to be patient. So if the stock does this and runs all the way up here, then you get paid $22 and you make the gain between 43.66 and 46. So you get an additional $2.50 and you get paid $22 to wait. And then, of course, if Morgan Stanley does trade down sideways for a little bit and this option becomes less valuable, you could buy that option back for less than you sold it for. So you sold it for 22 cents, you buy it back for 10 cents, you make an extra 10 bucks, and then the stock goes a little bit, the stock actually ends up bouncing, and you get paid $10 to wait. So there's all kinds of cool things you can do with options, and that's what's amazing. And there's all kinds of things you can do with stocks in general. I just love the market so much. It was a very, very profitable week for the vast majority of real-life trading participants. So for everyone out there, congratulations. And Jason, you're up very handsomely on those call options on Morgan Stanley. So good job. I'm glad we gapped up on earnings and things went in your favor. Very obvious, fadeable gap. Right, blue chip stock gapping up, white candle, white candle, white candle, white candle, white candle, huge bullish move. So that was a spot that if I had that option, probably would have sold it at open yesterday, locked in the gain, and then would have been able to buy back that option later today. So I've done that very frequently, especially if you're holding over earnings and you get a gap up, when you're reading the charts and you're able to see, man, there's so many people who are profitable. I'm sure those people are going to sell and lock in a profit. And that's precisely what happened on Morgan Stanley. So bottom line, my man, keep holding. Looks good. Let those moving averages catch up. And I think 46 and a half will be a decent target in the next 2 to 3 weeks for that to hit, hopefully. All right, my friend, and anyone else who's watching, thanks so much for tuning in to your Friday Trade Review brought to you by Real Life Trading and Jerremy Newsome. That's me. Have a wonderful weekend. Go crush life, enrich some lives, and I will see you all later.